We would like to welcome everyone to our Homebuyer Education webinar. On behalf of the Warner Robins Alumni Chapter of Delta Sigma Theta Sorority Incorporated and our Economic Development Committee, we welcome everyone who have joined us today, and we are excited. Before we move forward, I would like to tell you a little bit more about our initiative. And the initiative is Financial Fortitude. So our initiative is Financial Fortitude, and national economic trends such as widening the economic gap between wealth and poverty are the basis of what we do with this initiative. Financial Fortitude is a program where we help participants set and define goals, develop a plan to achieve those goals, and also put those plans into actions. And we do those things by partnering with personnel and different organizations. Today's webinar exemplifies and represents one of the components of financial fortitude, which is home ownership. So as we move forward, I welcome you, I invite you and encourage you to take thorough notes. If you have questions as the presenter is presenting, please either hold those questions to the end, or you can include them in the chat and I will relay them to our presenters. On today, we have with us Ryan Durham. And I'll go ahead and introduce our speakers for this event. And by the way, I am Ulysses McGee. I'm the chair of the Economic Development Committee. So today we have Ryan Durham of Keller Williams Realty, Middle Georgia. And Ryan is a realtor, and what he will do is talk about the process of buying a home. Joining him, we will have LaRhonda Patrick of Williams Patrick Law, LLC, who will discuss the closing process, and also loan officer Monica Ruyter, who is with Network Funding. And from her, you will learn about loan options and the requirements to purchase a home. Without further ado, I will allow Ryan to present at this time.
Hello, everyone. I hope y'all have a wonderful afternoon. A little bit about myself, like Ms. Ulysses said, I am a realtor with Keller Williams in the Middle Georgia area, and I also service the whole state of Georgia. So anywhere in the state of Georgia, I am licensed. Can y'all hear me? Can anybody hear me?
Yes, we hear you.
Okay, all right. Okay, it was muted on my end. But a lot of questions that I get is, why should I buy versus rent it? And we're just gonna go ahead and go into it on the difference between buying and renting. So the benefits of buying a house, first thing first, is your equity. Equity can be a good thing, and it's also can be something that, how can I put it, have to be used wisely. So first thing you want to think about is money in your pocket. All right, so you can have equity line of credit. Home equity line of credit is a secured line of credit secured by the equity in your home. It's something like a credit, not really a credit card, but it can be used like the credit card is your secured card. And then you also got cash out refinancing. Cash out refinance is when a mortgage is refinanced for more than what is owed, and the borrower take the money out in difference. So that's one of the parts of buying a home. So let's say you bought a home in a developing neighborhood 2 years ago, and the house, when you bought it at 180. 2 years passed, now your house is worth $220,000. Instantly, you got $42,000 in equity in your home. with that, you can refinance, like I said, and take the money out and pay off big student loan debts, or a car note, or you can plan a vacation or a wedding. Anything you want to do with that money, you can use it for, and it'll just be a part of the mortgage. Now, with the equity line of credit, you want to be mindful when you're using that, because you have to pay it back, whatever the time period that you agree with the lender. But most importantly, if you miss a payment when it comes down to the line of credit, your house can also be foreclosed on. So you just want to be mindful whenever you using the line of credit. But that's one of the perks. But not only that, is ownership, real estate ownership.
Cold water.
So when
ice, like cold water coming out.
can everybody please mute your microphone? Thank you. But like I was saying, one of the greatest benefits when you purchasing a home is real estate ownership. Real estate ownership, you can resell for capital gains. You can use that your initial house for collateral to get other loans for rental property and investment. But just the fact that you own a home, you can capitalize a lot better than versus when you just renting. When you're renting a home, that's all you're doing. You're paying the landlord or the owner, and he's getting the income from it. He or she, they're grossing the income, and they're just allowing you stay in it. But it comes with a lot of rules and regulations. Even though with homes, if you own a home and you live in a subdivision, you can have HOAs that give you different stipulation on what you can and cannot do in the subdivision. It's just completely different because when you're renting, you got to abide by all the rules that are set forth by that owner, whether you agree with it or not. Once you sign that lease, you're automatically locked in. All right, we'll keep going. So the first step when you are ready to buy a house is going to be getting approval. And when you get approved, you will talk to a lender, and they will go over the different options on what you can get pre-approved for. And then they're going to tell you the types of loan there are that you can apply for. So the different types of loan is the FHA, the Federal Housing Administration, USDA, or United States Department of Agriculture. You got the conventional loan, and then you got the VA loan, a Veterans Affairs. So with FHA themselves require a 580 credit score, but most lenders require a higher credit score. A lot of them have a minimum of 620, but with COVID-19 going on at the moment, a lot of them are requiring you to have at least a 640. So you want to keep that in mind when you do go and inquire about getting a home loan. Also, your debt to income ratio. Debt to income ratio is the amount of money that you gross each month versus the debt that you have to pay out each month. And they come up with the percentage. So with FHA, a lot of time they want you to be 46% or less. That's more favorable. Depending on your credit score, it can go up to 50%, but they usually don't like it. They want you to stay at least at 49% or less, 46. And then also with FHA is a mandatory 3.5% down payment. The next one is USDA loan requirements. They do not require you to have a down payment. And most time they do want you to have a 640 credit score and at least a debt to income ratio of 41% or less. And it's only for rural areas. You cannot be in the urban area and get qualified for USDA home. They won't let you do it at all. And also, if you do decide to go the route for USDA, you have to remember, even though you'll go through underwriting with the lender, and the lender underwriter can approve you for the loan, you will also have to go through USDA to be approved for that loan as well. So you actually will go through underwriting twice, and a lot of time USDA loans take longer to close out than a FHA loan. The next one is conventional loan requirements. Most time, lenders want you to have at least a 660 or better when it comes down to conventional loan. Conventional loan most time are not backed by the government, so it's a little bit more of a risk whenever they're giving out that type of loan. But that down payment would be anywhere from 3% to 20%, and sometimes 25%, just depending on the lender. And you can have a 50% debt income ratio or less. VA loan. VA do not have a minimum credit score, but lenders a lot of time will have their own requirement when it comes down to credit score. And then you have to be a serviceman that's been active duty for 2 years, or a National Guard member that have had at least 6 years of service and been mobilized for active duty service for a period of 90 days, at least 90 days. Or if you discharged because of service-connected disability. And right now for 2020, the max VA loan is $510,400 that you can get approved for USDA loan. So you found your loan you want to go for, you get your pre-approval, the lender say yes, you meet all the qualifications, you can move forward, shopping for a house. This is the part when you actually go ahead and find a realtor. So when you find a realtor, you want to make sure you find a realtor that best fits your personality, because realtors, when you're working with someone with just like any type of customer service deal, working with anybody that's giving you type of service, you want to make sure that that person or company can relate to you and understand exactly what it is that you're looking for. And also you got to remember that a realtor is your legal representation going throughout this process, and they're supposed to have your best interest at hand at all times. So your realtor is not supposed to abide against anything that is not going to be beneficial for you. And if they are, then, you know, that can kind of be not good. But you want to also always make sure that your realtor is doing everything he or she is supposed to have your best interest in hand. So after that, once you find a realtor, and he or she will pull up some home in the listing MLS to see what you like. Once you give them your criteria, you'll start house searchings. And whenever you do go to find a home, you want to make sure that you write out your top 5 must-have. And that can be 4-bedroom, 2-car garage. Got to have a hot tub. I want at least 1 acre. Just anything that you feel like you have to have, and that is not negotiable. But you also want to remember that most time when you buy your first home, it's going to tell you everything that you don't want in your second home. Because I know for my wife and I, we always thought, well, when we get a house, we're going to have 2 stories. We're going stairs, the bedrooms upstairs, until we moved in and we had to start carrying our kids up and down the stairs. And we're like, yeah, the next home, we cannot have stairs. So that's just an example of some of the things that you will see in your first home that you probably would not want to take with you on the next time. So once you find a house and everybody come to understand, like, yes, I want to make an offer on this house, you automatically is showing interest in that property. So making an offer, let the seller know that you're interested in purchasing a home that is listed for sale. And you can look at an offer as a purchase and sale agreement that includes the purchase price amount, the closing costs, and the special stipulation. So special stipulation can be something like, well, I will purchase the house, but the seller has to provide a termite letter. Or I really like the patio set that the seller had on the back porch, so I would purchase the house and make an offer on it as long as you let the patio set stay with the house, or the bar stool, just anything you feel like can be added on. That's when you put in that section. And once the offer has been accepted by the seller, you will automatically go into your due diligence period. So during your due diligence period is usually around 15 days that you go in and you submit your earnest money. You have your home inspected. The home inspection is very, very crucial because the home inspector is working on your behalf. So whenever you do hire an inspector to go in to inspect a home, he's looking for things like hidden defects that the seller did not tell you, or did not know themselves. But a lot of time, those things are called material information that they have to disclose, but sometimes people just don't. So whenever you do go to hire an inspector, make sure you look at their qualification as well, or see if they're insured and licensed through the state that you're living in. Now, when it comes out to your earnest money, that can be anywhere from $10 to $3,500. It all depends on what the seller and the buyer agreed to. So everything inside of a purchase and sale agreement can be negotiated. Everybody just have to come to agreement and say, okay, I will accept the $10 or I accept the $500. But most time in our area and in the state of Georgia, the earnest money is around $1,000. Unless you purchase a home that's $500,000 or $1 million, then it can be a little bit more around the 3,500 to 5,000 mark, but it just all depends. And also in that due diligence period, you're going to make your final decision on whether or not you want to purchase a home or not. So let's say you get your report back, and let's say you get your inspection report back and they said, well, it was moisture underneath the house, and it was some type of mold that had to be treated, or it needed a moisture barrier installed underneath the home. You can write up something called an amendment to address concerns and ask the seller to correct those issues, or you can decide, you know, it's too much. I don't think I want to deal with it, considering that it had mold, and I rather not continue on and terminate the purchase and sale agreement. In that time period, you can do that because you have that 15-day to do so. And any earnest money that was given will automatically be refunded to you because you was within that due diligence period. Also, during that period, whenever that offer is accepted, you have something called your financial contingency period. And what that is a clause in the home purchase and sale agreement that expresses that the offer is contingent on being able to secure financing for the house. So if you cannot get approved for the loan, then that will qualify you to have your earnest money refunded as well. And most time, financial contingency period are within the 21 or 25 day. Like I said, all the numbers are negotiated with the buyer and seller, but just most time when anybody's submitting it is usually 21 to 25 days that they give you for your financial contingency period. And during that time, you'll be working with your lender. They'll be giving you all the documentation that you would need to be able to be approved for the loan. Now, like I said, if you cannot get approved for the loan, you cannot secure it, all your earnest money will be refunded unless you're outside of that financial contingency period. So let's say 3 days before your closing date, the lender said, well, your verification of employment came back and you aren't making as much as we thought, or you're not working as many hours that we initially put in that you was working, and you no longer qualify for the loan. At that point, since you are outside of your financing contingency period, depending on the seller, but most time you will not be able to get your earnest money back, even though it wasn't your fault, because everything still have to be within that time period. And also during that financial contingency period, your lender will order an appraisal. An appraisal determines the value of a home, ensuring that the price reflects the home condition, age, location, and features such as numbers of bathrooms. So the lender does that. If it's a cash offer, then the buyer can order their own appraisal. But most time, whenever lender is involved, the seller and the buyer is not allowed to order the appraisal themselves because it can be biased. Whenever you order the appraisal directly with an appraiser, he will be working on your side and it can sway the value of the home just to satisfy you and make you happy. So the lender always ordered the appraisal. All right, the next thing we're going to talk about is down payment assistance. And a lot of people do ask about this. They ask about it without knowing they're asking about it. So most time people say, hey, I want to use the first time home buyer program. And a first time home buyer is really just a general term. Now, some lenders do have incentives that they give you for being a first-time home buyer, but here in the state of Georgia, not to my knowledge, there's not a program to say first-time home buyer program, unless it's with a private sector or a private lender that have their own down payment assistance or program that's named that. But generally speaking, most people automatically assume, hey, I want to use the first time home buyer. But they do have programs out there that would give you your down payment and give you closing costs. It just depends on the lender. So even though you may qualify for down payment, let's say you apply for a program like Nets Homes and their down payment assistance program. Let's say you apply for it and say, well, you qualify for $15,000 towards your down payment and closing costs. That doesn't necessarily mean you was approved for a home loan. They say you just meet the qualification for their program to get those funds, but you still have to go through their lender or a lender to be qualified or approved for your own mortgage loan. They don't hold any type of personal information about you or anything like that when it comes down to financing a home. They just say, hey, you qualified, but you still got to go through your underwriting. And with that, credit score depends on the lender at that point with that down payment assistance program. And here in the state of Georgia, they got several different type of down payment assistance programs, but it's going to be based on the lender and if they use that program or not. The next thing is closing costs. A lot of people automatically think that their closing costs is their down payment, but closing costs are the fees paid at the closing of a real estate transaction. Closing costs include lender fees and attorney fees, which, like for example, you got your origination fees. Sometimes lenders have you pay for your appraisal upfront, or they'll let you pay it at closing, or any type of stipulation between you and the lender. Let's say you had a debt or not a debt in an account that was $3,000, and they say, hey, you can't get approved for this loan, but it's contingent on you paying off that debt before you close. That's something that would be a part of your closing costs. Down payment is not considered a part of your closing costs. Cash to close, sometimes referred to funds to close, is the amount of money required to complete the transaction of buying a house. So you have your down payment plus your closing costs plus your earnest money and any other stipulation with the lender that would equal out to be your cash to close. And that's what you would need to close out that transaction. So let's say your down payment is $3,500 and the lender say your closing cost is $3,500. You already submitted your earnest money of $1,000, they equal $8,000. If your total closing cost is $10,000, you will automatically subtract that $8,000 that already been applied, and then sometimes you will have a gap. That gap is what a lot of lenders would like for you to have secured. So I don't want anyone buying a house to automatically assume, well, if I'm getting the down payment assistance and the seller's giving me $3,500 now, I already submitted my $1,000 earnest money, I'm good. I will not have to bring any money to the table. That's not necessarily true, because sometimes you will have a gap between, it can be anywhere from $2,000, $5,000. It doesn't matter, that you will be responsible for. And that will also be a part of the cash to close. So just keep that in mind. And once you go through all that, you will automatically get your clear to close. Once you have met all your lender stipulation and the appraisal come back good and spreadsheet come back good, then you will be clear to close. And then going on to closing. So at the time of the closing, a closing attorney title company is the person or company that will be selling the transaction for both parties. Now, a closing attorney, not supposed to be buyers. They're not working for the buyer or the seller. They're just here to make sure that this transaction closed and all the titles and deeds be transferred over to the buyer's name with no problems. So the closing attorney will go through the contract with you, go through the agreement between you and the lender to make sure that you understand the numbers, your payment, where you will make your payment. They will go into depth So whenever you go through financing, you'll be getting a lot of disclosure, and Monica D. Ruyter, she'll be explaining this. You'll get your disclosure, you get all type of information that you will be assigning electronically, or you can sign by pen. But once you get to the closing table, you will have to do all that over again, because it have to be, most of the time they require you to have a pen and it have to be blue. And closing can take anywhere from 30 minutes up into 3 hours, 5 hours. I know for myself, when I closed on my property, I thought it would be an hour or so, and I ended up being there for around 4 hours. And so just keep that in mind whenever you do have a closing date. Sometimes it can be 30 minutes, but you want to make sure that you book up enough time in case something happened, you'll be able to still sit there and close out the transactions. And once all the documents are signed, you'll receive your keys, you'll move into your new home. So that's my portion. We do have Monica D. Ruyter on the line, so I'm gonna let her come in, and she's gonna go into depth when it comes down to the financing, because she is a lender. And any question that you have, you will be able to ask at that time. And after that, then Ms. Rashana Patrick from Patrick Law will also come and speak about the closing part.
Okay, this is my first Zoom. Can everybody hear me?
Yes, we can hear you.
Okay, perfect. Well, great. I'm thankful for this opportunity. Again, I work closely with Ryan. My name is Monica D. Ruyter, and I am with Network Funding. My office is situated in Lawrenceville, but I can lend all over the state of Georgia. Buying a home, I know, is a scary process, but I enjoy helping people get into their homes. One of the processes, the first process that we would do with me is to complete an application and to see where your credit score is, what you could qualify for a purchase price. I request initial documentations, which are usually 30 days of pay stubs, 2 years of W-2s, and 60 days of bank statements to show your, the funds that you have available, and a driver's license. You would fill out your online application, and then once I review it, I definitely go over everything with you. If right now our company requires, an FHA loan with the 3.5% down payment to be at about a 640 credit score, and it's called a qualifying credit score. So we do have the 3 credit bureaus. You have TransUnion, Equifax, and Experian. So say your 3 scores are 680, 660, and 640. We take the middle of the 3 scores, so we would qualify you for an FHA program at the 660. Ryan did touch a little bit on if there are some debts that you would need to possibly pay off to keep your debt to income ratio within guidelines. I help that way. There is also, I like, to go over your application and say there's been, especially with this COVID and everything, maybe your credit score isn't as high as we need it to be. I will work with you to help advise and guide you as what you could do to increase your score so you can, purchase your home. We would go over what's called a credit analyzer. It's not what I advise you to do, it's what the bureaus suggest to pay down or pay off to increase your credit. Once I have your documents and your credit reports, and I always like to ask what a monthly payment is that you feel comfortable with going in, and then I would, qualify you at a certain purchase price amount, you would get a pre-qualification letter or pre-approval letter. And with that letter, you and your realtor, whether it's Ryan or another, would take that letter and then go look at for your homes. And once you got you have received your purchase contract, then the underwriting and processing process starts. We would, request additional documents. You go in and you get your loan reviewed by the underwriter. And once the underwriter reviews everything, 9 times out of 10, they do request additional documents. So when you're going with a lender, you would think that I already provided you all the initial documents, but be prepared that lenders do require additional items. There always seems to be something that the underwriter wants additional information on, or just to further explain things that they see, just to make sure that your whole credit package is credit worthy. One thing that I like to do is, be in constant contact with you and through the whole process. Any questions, anything that I could answer for you, I am always available, whether by phone or by email. The process, the lending and purchasing financing process, like I said before, can be a little scary, but that's what I'm here for. I've worked for, several different mortgage companies throughout my career, and I just enjoy working with people and helping them get into homes. That's something that I really thrive on. There's, and Ryan did touch bases on the different loan programs that we have. FHA is typically a lot of the first time home buyers buy FHA because it has the 3.5% down payment. There are conventional programs that only require 3% down instead of the typical 5% down. So it all bases is on your credit and your credit worthiness. And we can go over different programs like that. One of the items that I have seen that is a hurdle, and just to be aware, is our wonderful student loans that we have. FHA and Fannie Mae and Freddie for conventional, and the USDA and VA, they all have guidelines pertaining to student loans. And if you have hundreds and thousands of dollars of student loans, we have to, whether you're paying on them or not, one of the hurdles is to make, we do have to show and have an estimated monthly payment. But conventional is a way that we don't have. If you're in forbearance or deferment, you can get a letter from your service provider and verify what your monthly payment is. So if you have $100,000 and you're only paying $100 a month, that's what we would use, for qualifying. FHA is a little different. They do require us to use a 1% payment amount of your balance. And, but if you contact your servicer and get a letter from them that states what a fully amortized monthly payment is, it could be, as low as $200 a month. So as long as we have the letter, we can review that. And I know, don't want you to get confused, I would go over everything with you. I know if you have any questions, a home buyer seminar is great, and I'm glad to be here and glad to be a lender here in the Georgia area to help everybody get into your home. Are there any questions?
All right, so we're gonna have Miss Patrick come on, and she's gonna talk about the closing aspect of it and what the closing attorney consists of.
Good afternoon, everyone. Hope you can hear me okay. Thank you, Mr. Durham, for including me in your webinar. You did a summary already of part of what the attorney's role is. So I just provided a little quick snapshot of the closing process. The closing is quite simply just the legal transfer of ownership from one party to another. That party can be an individual, it can be a business. The parties that you're going to see on the closing side once you start engaging with an attorney is going to be a title agent. That's the person that actually writes the title insurance policy. Typically in the state of Georgia, if you are getting a home finance, meaning you're going through a lender like the individual just spoke, then you're going to have a title insurance policy.
Materials with you.
Excuse me?
This will be the time to go and get everything.
Excuse me, was there a question? Okay, I heard some feedback. I'm not sure, I thought someone was trying to speak or ask a question. So I'm gonna go ahead and continue speaking. All right, so you have the person that actually is gonna write the title insurance policy for the lender. But there's also a title insurance policy option for the buyer as well. Okay, the next party you're going to have is the closing agent. That person is typically the individual who appears at the closing. Now, you see 3 parties listed here. One person can handle all 3 roles, but on your settlement statement, you're going to see them itemized. So I like to go over the role of each of them that way, just in case. So your closing agent is a person that goes over the documents with you on the closing day and explains to you what you're signing. And then you also have your title company. The title company is usually its own separate entity that actually provides it's like the insurance company, like a State Farm, like a Geico, but this is the policies they do are only for title insurance for your home. And what a title insurance policy is, it just protects you in case somewhere down the line someone comes and says, hey, the house that you just built on this land was my ancestors' land and it was stolen from them, so you don't have a legal right to it. It was never yours to have. Your title insurance policy protects you in case something like that were to occur. So it is very important to have a title insurance policy in this day and age, because if there's human error somewhere in the chain of title, the title insurance policy helps you keep clean title on your home so you can remain in your home, even if somebody comes and tries to claim right to it. All right, so we're going to move on to the steps. There's just 6 simple steps when it comes to a closing. Step 1 is a purchase and sale agreement. I'm sure Mr. Durham already explained to you what that was. That does officially start the closing process on the legal side. Okay, you can have the purchase and sale agreement given to you by your realtor. You can do it on your own, or you can have your attorney do it for you. The second step is a title search. That's when the title insurance company is engaged. They're going through all the legal documents to see what ownership looked like down the line before you get to the point of you purchasing it, to make sure the title is clear, to see if there's any liens on the property. If there are any liens, then they're working to get those cleared so that closing can happen and you can have full title, fee simple title of your home. The next step is inspections, appraisals, those things. The law firm or the attorney is not usually involved in that, but it is something that occurs in the chain of the actual closing. And then you have your insurance. That's going to be your homeowner's insurance, also your title insurance policies. Okay, all these are going to happen before the closing day. So once closing day occurs, that's when you're going through all the documentation. In this day and age, closings take place in person or they take place virtually, and also mail away. So because of COVID, we have judicial orders on the legal side that tells us we don't have to do them in person anymore if the parties so wish. So closing day, we're going through all those documentation. The most important documents in any closing are the ones I have listed here. You'll see this, the warranty deed, the security deed, and the promissory note. These are things that every closing should have in it, unless you're buying cash. If you're doing a cash deal, meaning you don't have to go through a lender, then all these documents, security deed specifically, and the promissory note will not exist. But typically you're going to see the warranty deed, the security deed. The security deed is what says your lender is lending the money to you. You have a mortgage, and it tells you if you don't pay your mortgage, then your lender has a security interest in your home, meaning they can take it from you through the foreclosure process. And that's what's filed at the courthouse, along with the warranty deeds. Everyone knows the promissory note, what that is. It tells you what your payments are, when it's due, and if you don't make your payments, what happens. Okay, and then the last step, this is after the closing day, after all the money has been exchanged, after you receive your keys and your copies of your documents, then outside of, after you're already in your home getting things moved in, the attorney's role is to do all the legal filings, which makes everything proper and legal in the state of Georgia. Once those legal filings are complete and time stamped, then you will get a copy of them to your mailing address, either of your new home or whatever home of record you have for sending notices. The last piece I want to go over to you is just some rules to remember. In the state of Georgia, Georgia is an attorney state, meaning all closings, real estate closings, must go through a licensed attorney in the state of Georgia. Okay. Something else a lot of people don't realize, when you sign your purchase and sale agreement, you can change your mind at any time, but you likely will forfeit your deposit. Inside your purchase and sale agreement, there likely are stipulations that gives you an easy out that all parties understand. If these things don't occur, then the purchase and sale agreement, it just goes away. But that also mostly will include your earnest money. Okay. Also, your purchase is typically contingent upon you receiving the financing necessary to purchase your home. So that's another safeguard for you if something were to happen, especially in this day and age, being that we are in a global pandemic. If something happens, you cannot make your purchase, you cannot close on your loan, the rules change, it makes it difficult for you to get your loan, and then the deal falls through the cracks. It's not going to weigh unfavorably on you. That's just always a way to get out of it. But it has to be a valid reason. It can't just be, oh, I'll just pretend I didn't get a loan. No, it's going to be something happened that made you not be able to close on your loan. That actually has happened quite a bit this year. For me, the beginning of the year, right when COVID started happening, we'd have people with purchase and sale agreements, and some things changed. Their employment may have changed and may have lost their jobs, unfortunately, or their interest rate that they thought they would get was no longer available, which made it which made them ineligible for the loan they needed. So then the purchase and sale agreement failed, but then also the earnest money went with it. Okay. So this is just a quick snapshot of the closing process from the legal perspective. If anyone has any questions, please feel free to ask me. I will state that I met Mr. Durham doing some closings for another law firm. I was just performing as a closing agent. They were not my deals. I just was there to go over the paperwork and make sure the paperwork's all processed properly and the home buyers get their keys. But I will start back again doing closings with a partner sometime at the beginning of next year. of course, depending on how COVID looks. But Mr. Durham, again, thank you, and I pass it back to you.
Okay, before you get off, someone asked the question, can you choose your own closing attorney, or is that hired by the seller or realty company?
Well, that's it. That really is a good question. Typically, the seller chooses the closing attorney, but either party can choose. Of course, if there's a dispute, like the seller says, I want this one, the buyer says, well, I want this one, then you can have two. You can literally have two. You can have one representing the buyer, another representing the seller. Usually you don't see a disagreement between the two. One party can lend to the other as far as what preference they have. But if you are a buyer and someone's telling you, well, you have to use this attorney, make sure it's what you want to do. Because at the end of the day, unless the seller is paying all the closing costs, which typically doesn't happen in this day and age, I should not say that actually, because it happens sometimes. I see it about 50% of the time. Unless the seller is paying for that whole fee, as far as the closing, the attorney's fees, the title insurance charges, all those things, then make sure you advocate for what you may want. Because if they pick an attorney that charges $1,200 just in the attorney's fee, and you're having to pay that bill, it might have been a good idea for you to say, hey, that's all fine and dandy, but I can't afford this, so I want to choose a different attorney. It's something that's negotiable between the parties typically. Okay, any other questions, Mr. Durham?
No, not at this time. But yes, you hit it right on the head. Whenever purchase sale agreement do come up, most time the realtors go in and assign a closing attorney. But like you said, if anybody's saying, well, we only will accept this preferred lender, they cannot do that. That could be a form of steering. It's a lot of legal things can happen behind that. So if you said that you do not want to use that closing attorney, it can be negotiated. Everything in your purchase and sale agreement can be negotiated, but everybody has to agree on it. So if everybody do not agree on it, then you can ultimately not have a purchase and sale agreement and everybody walk away from it. All right, so we had a question. Is it appropriate to take a home inspector with you when you're house hunting? That way the time is not wasted. Inappropriate, I'm sorry. It's not inappropriate, but the thing is, even if you take it, an inspector with you, you still have to have a binding agreement before you can do anything with that. So you can't even address concerns with that property without having a binding agreement. The only thing you will be getting is just information. But in order for the inspector to do a real inspection on the home, you will have to be in a binding agreement. Now, you wouldn't want to pay the inspector just to do inspection on a home that you're not ready to purchase, because the inspection can cost anywhere from $200 on up, depending on the inspector. All right. We have another questions. All right. So, Ms. Petra, I think this question is going to be for you. It said, there are free avenues for an individual to do title searches outside of the purchase. Okay, no, the title searches have to go through a closing attorney. You can't go into tax assessor and see who owned the house and the recent sales of that house. But when it comes down to the title, you can go to the courthouse and ask for a title search. But to run a title for a purchase and sale agreement, you're gonna have to go through an attorney.
And Mr. Durham, if I may add, this is LaRhonda, Patrick, by the way.
Okay.
Yeah.
If you are purchasing a home in cash, you don't have to do a title policy if you don't want to. It's wise to do so. I never recommend that someone not do a title insurance, title search and title insurance policy. But if you want to take it quick claim, meaning you're paying in cash, and you're taking it as is, then that'll be your discretion. And of course that is free, but the risk can be thousands and thousands and thousands and thousands of dollars. So I just want to throw that out there. I work with people, especially investors, who say, we're not going to get a title insurance policy. We don't want a title search. We just want to close on the property as is. So that is an option if you're doing a cash closing only.
All right, thank you. All right, the next question is there a rule of thumb for how much house you can afford? What are the common home buyer mistakes to avoid? Let's say I'm interested in purchasing a car and a home. Which should I purchase first? All right, that is an awesome question. So the most common mistake that people do when they ready to purchase a home is just going out searching for a home without talking to a lender. You want to get pre-approved before you go searching for a house, simple because your lender going to let you know how much you can afford, what your payment is going to be around each month, and just the ins and outs of your do's and don'ts. So the biggest mistake is thinking that you can just go out there, well, I want this house, I'm gonna put a purchase and sale agreement on this house, and then I'm gonna find a lender. It's not gonna work like that. And even now, a lot of people recommend that you have a lot of people want you to have your pre-qualification letter before you make an offer on the property, or whenever you submit an offer on the property, they want you to have your pre-qualification letter with you. Now, if you're interested in purchasing a car and a home, I would suggest you do it after you purchase your home. Simply because, let's say you purchase you in the process of buying a home, your closing is next week or 2 weeks from now, and you go buy a car thinking everything is good. You got your conditional approval. You go buy the house, and right before you close, your lender repull your credit for credit worthiness. If they see that you have bought a new car right before your closing, it's gonna depending on how much the car is and where your debt income ratio is, it can automatically disqualify you for the loan. So the biggest rule of thumb is do not make any big purchases if you're thinking about buying a home, especially if you're going through the process. Do not do that. So I would say if you have a car and it's working fine and you're looking to buy a house in the next couple of months, wait on the car, focus on the house, make sure that you got everything you need, speak with the lender. But if you're saying, well, I want to buy a house 2 years from now, there's nothing wrong with buying a car as long as you keep in mind that buying a car, it is an installment loan, which means it will be on your credit report and it will raise your debt income ratio. Do we have any more questions? All righty. All right. So I want to thank you all for joining and listening to the Homebuyer Seminar. I also want to thank the wonderful ladies of Delta Sigma Theta Incorporated for allowing me to come in and share my jewels. If anybody ever have any questions, please reach out to me. You can reach me on Facebook, Ryan Durham, or Durham Realty Group, Instagram, Durham the Realtor. My email is ryan.durham@kw.com. You can call or text me 478-542-1625. I'm always close. Like I said, I live in the Warner Robins area. So if anybody looking for guidance or just want to be coached for the next upcoming month or year or however long, and if you want to see where you are, if you're ready now to jump out there and see if you can purchase a home, reach out to me. Monica, she would not mind getting you pre-qualified or saying exactly what you need to do to get it done. Like I said, thank you all for joining, and I'm passing it back to Miss Ulysses.
Thank you so much, Mr. Durham. And I would like, if all of the presenters, if you will share your contact information so that our participants, if they have additional questions, they can contact you. Thank you.
Monica, can you share your contact information with us, please?
Sorry, I was going to do it in the chat. Yes, it's my email is Monica, MONICA .DRuyter, and it's DERUYTER at N as in Nancy, F as in Frank, L as in Larry, P as in Paul.com. And then my work number is 404-760-8416. So if you have any questions, and if you are interested in, like I said, getting pre-qualified, my website address that will take you to my online application is www.monicabestlo.com.
And my information, this is LaRhonda Patrick. It is, I did put it inside the chat. My firm again is Williams Patrick Law LLC. We are located in Warner Robins, Georgia. My email is lpatrick@wpatricklaw.com. Again, lpatrick@wpatricklaw.com.
Thank you. I do see a hand raised. Ebony Jones, do you have a question? Once again, Ebony Jones, did you have a question? Okay, thank you. Once again, we would like to thank everyone for joining us on behalf of the Warner Robins Alumni Chapter and also the Economic Development Committee. Thank you so much for joining this Financial Fortitude event. Thank you, Mr. Durham, for an amazing presentation and a wealth of information and knowledge. Also, thank you to Ms. Patrick and Mr. Ruyter for joining us. If you have any questions, participants, feel free to check the chat. They have all placed their contact information in the chat. If you will take that information, write it down. You will have it handy as you need it. And we thank you for joining us. Please follow the Warner Robins Alumni Chapter on social media if you are not already doing so. And stay tuned for further events. Thank you and enjoy the rest of your day. Take care, everyone.